To begin understanding tips for Betterment asset classes, it is essential to first comprehend what asset classes are and how they function within the context of investment portfolios. Asset classes refer to broad categories of investments that exhibit similar characteristics and are typically subject to similar market forces and regulations. The main asset classes include stocks, bonds, and cash equivalents, each carrying its own level of risk and potential return. Stocks represent ownership in companies and offer the potential for high returns over the long term, but come with higher volatility. Bonds are debt securities issued by companies or governments to raise capital, offering regular income and relatively lower risk. Cash equivalents are low-risk investments with high liquidity, such as money market funds, ideal for short-term needs. When considering Betterment asset classes, it is crucial to diversify your portfolio across different classes to minimize risk and maximize returns. Betterment, as a robo-advisor, automatically diversifies your investments based on your risk tolerance and financial goals. It allocates your investments into a mix of low-cost index funds that track various asset classes, ensuring broad diversification and potentially lowering your investment costs. A key concept in managing Betterment asset classes is understanding your risk tolerance. If you are more risk-averse, your portfolio might be weighted more heavily towards bonds and cash equivalents. Conversely, if you are willing to take on more risk in pursuit of higher returns, your portfolio might be more stock-heavy. Practical examples include setting up a tax-advantaged retirement account through Betterment, where you can allocate your contributions into a diversified portfolio that automatically adjusts as market conditions change. Another example is using tax loss harvesting, a feature offered by Betterment, to reduce your tax liability by selling securities that have declined in value and using those losses to offset gains from other investments. Best practices for managing Betterment asset classes include regularly reviewing and adjusting your portfolio to ensure it remains aligned with your financial goals and risk tolerance. It is also important to contribute consistently to your investments, taking advantage of dollar cost averaging to reduce the impact of market volatility on your portfolio. In conclusion, effectively managing Betterment asset classes involves understanding the different asset classes available, diversifying your portfolio, and regularly reviewing and adjusting your investments to match your financial goals and risk tolerance. By following these tips and best practices, you can create a robust investment strategy that helps you achieve long-term financial success.